Welcome back, folks. This is a market review for the ICT Mentorship for April 3rd, 2019. This is a daily chart of the dollar index. Now, this is AVA demo account data, and I wanted to bring your attention back to this volume imbalance right in here. So we were missing some portion of price action right in here between these two bodies here. Now, yes, there was some wick in here, but before I remove this rectangle, highlighting that range, just note that it's the close and the open that I've delineated. So I'll take that off. Half of that range is what that blue line is. Okay, you see that here. So when we drop down to lower time frame, this will be salient once we drop into intraday charts. We also have a fair value gap in here as well. You'll see that the blue line in here, 96.50. That will be salient as well when we drop down to lower time frames. It's this candle's low here, this candle's low, and this candle's high, because single candle passed through here. No sell side delivery was offered beyond the candle's low on this day. Okay, so 96.54. That's what this level is here. Splitting that range. Okay, we have consequent encroachment, and again, consequent encroachment as well for this volume imbalance. Now, if we drop down into a 15-minute time frame and scrunch this up, there's those two bands of institutional order flow. So here's that volume imbalance, the mean of that range, or consequent encroachment, and here's the mean of the fair value gap. Perfect delivery. Now, the bulk of the volume is really close to this, so I'm not going to make too much of a big deal about it, but still, it's enough to warrant a really nice respect of that level. So between this level here and this level here, bullish prices would be permitted for foreign currencies. That's all I'm going to say about dollar. Let's go back out to the daily. What I want to see is what we do the rest of this week. Now, I'm not trading anymore. I did a clinic today on institutional order flow on intraday price action. So what I want to see this week is, are we willing to go below this swing low here? And if we do, we'll be going back into this order block in here. Or do we run above here and fill in this entirety and then continuously press higher for that longer term buy side liquidity relative to the dollar index? I don't know, and because it's non-farm payroll week, I don't care. And that's another reason why I'm taking the rest of the week off. I got to get caught up with content production. Okay, and the lessons for this month. It's obviously, charter members get 2 because I owe them the update for a price action model that's been released and a new one. So those lessons obviously are for them. But I'll be doing one specific teaching this month. It'll be on the 24th of April, that Wednesday. So it'll be teaching the contrast between long form analysis and short form analysis. And what that's going to help you learn is, when we sit down in front of the charts, what things do we go for in terms of tools and concepts to help frame out daily bias and how to operate within the intraday volatility. That's going to be it for that. Let's move on over to euro dollar. All right, so euro had a little bit of a pop today. It's still it's still ugly. To be honest with you, it's a mess. So, are we looking at one more little pseudo rally before they dip below here and leave the 112s for a little while and maybe run into the 110s? I don't know. Like I said, it's all based on what we'd see in the dollar index, and non-farm payroll may, spur some kind of a sentiment shift for that to occur, or it may not. I don't know. But I don't have really anything to talk about for euro. I want to take our discussion over to GBP. And this is a monthly chart, and I'm going to zoom in. And if we were looking at price action in here, this may or may not be clear to you. And I'm going to make the argument that when prices, like on a monthly chart, sometimes it stays within ranges like it does here. like it's doing in here right before the big move down. It's staying in a range in here. All through here is a range. So from a long-term higher time frame position trader's perspective, it can be rather frustrating to say the least. So we're essentially doing the same thing here. Okay, now I'm not making an argument that we trade into a bullish order block here and therefore we're going to trade higher, take out equal highs here, and that's not what I'm trying to indicate or suggest to anyone, because right now we're in a consolidation phase in the marketplace. There's no ifs, ands, or buts about it. It's the way it is. So if this chart is the monthly and this is the weekly, look at the mess we're in here. Okay, large consolidation. Same thing occurs on the daily. We're in a large consolidation. So if we have no real clear indications on bias in a market like we're seeing here in consolidation, it forces us to go into scalper. Okay, so in scalping mode, we drop way down into the lower time frames. Hourly is kind of like going to take the position of like a daily chart. And then the 15-minute time frame is going to act like maybe an hourly chart relative to a real daily chart. And you're going to need to listen to this video again because I'm only going to say it one time. But the 1 and 5 minute chart will act as the 15 and 5. In normal market conditions, we look at a daily, a 1 hour, and a 15-minute time frame. Well, when we're looking at short-term intraday scalping, like you watched me do today, that was a clinic, okay, on my understanding of price action in an intraday basis. So I'll leave you to go back and look at what I shared on Twitter. To me personally, it's everything I ever wanted to be able to do and more when I first started to learn how to trade. And back in the 90s, I didn't think anybody could do what I was doing today. So I kind of put a cape on today, not to beat my chest or anything, but I wanted to make a statement today. And I don't like to jawbone and brag in the mentorship, but I'm only saying this one time. I get a lot of emails about, if you're so good, why don't you show this? Or if you're so good, why don't this happen? And I've been running an account for almost 1.5 years on Twitter. And you guys can see what I'm doing. I show the results of it. I record the executions as much as I can. But I try to, it has to be compressed down to a 45-second video. So I'm kind of like, not only am I trying to beat the market, okay, in terms of buying it and selling it at the right time and setting my stops and all that, and also making myself available to record it as these positions are coming in and when they're hitting their profit objectives or when I'm scaling out positions. I'm also doing other things in the background. So it's a lot. It's like plate spinning. So if today was impressive, and it may not have been, but if it was, just know that I was doing 1,000 other things in addition to all that. So the statement I was trying to make to everyone on Twitter and some of the folks that are in the mentorship, because there's some new folks in here that they're like, hey, look, you act like one thing on Twitter, but you're entirely something different in the mentorship. Well, that's true because I use Twitter for my playground. It allows me to, exercise my ego there. It keeps it out of the mentorship and also keeps it out of my trading. I asked my wife if I could just let myself go today because she watches my Twitter account. She watches what I say, and I have to hear about it. She's like a proctor. She keeps me honest and holds me accountable to certain things. And if I overstep my character bounds that she's allowed for me, I have to honor what she wants. She's my wife. So I represent our family on here too. And sometimes in the past I have done things, said things that were not always flattering for her. So, and who knows if her friends and my friends are watching me on Twitter. I don't know. So she seems to think that some of them are. And I don't live my life like I do on Twitter. Okay, I'm like a WWE wrestler. I do as much as I can to get all that stuff out of my system on Twitter. And I have fun with it. A lot of people take it serious, and to me, I take that as a compliment because I'm really selling the character. But the point was today, I know what I'm doing, and you're in good hands with me. So if I can turn on every intraday turning point like you saw today, I was buying and selling, buying and selling, buying and selling. I was on both sides of the spectrum. I was working both runs on liquidity. I was using liquidity pools. And the only thing I'm going to talk about in this discussion here, but it'll also validate what you learned in March. So if you're new, you just came in, or you've been in the mentorship, I kind of want to go back and just poke and prod you to remind you that what I taught you in March, if you take that and just month content of month 1 of the mentorship, the core content, if you blend those two together, that's a complete model. And if you didn't catch that, I really want to kind of like press that tonight, because it is absolutely gold. It's so good, it's unbelievable. So I used it today in concert with other things that, I'm not going to talk about yet, because I have to teach a lot of other things to get us into that realm of discussion. But there was elements of time that I have not taught yet, and that is highly specific to the algorithms. So you have a lot of stuff to learn before we get into that. But I wanted to showcase my ability using the information, because you all are familiar with optimal trade entry and order blocks, okay? But I don't trade on a chart. I don't trade with a chart. I'm looking for things that exist outside of a chart. And I'm going to kind of like revisit that again tonight as well. I'm mindful that I don't want this video to go longer than 30 minutes. So right now we're at like 14 minutes or so. So I kind of like want to get into it, but I just wanted to preface it by saying that what I did today on Twitter, I'm not doing that anymore. Okay. And I don't care, if people are upset that I'm not fully explaining everything, because there are some things that I'm not going to teach, obviously, on Twitter. And there are other things that are going to require you to learn more before it's beneficial to you in the mentorship. Will I teach high-frequency trading? Yes, it will be discussed in 2020. Well, you're kicking the can down the road, Michael. No, there's some things that you need to know before you can actually do it. Some of you are barking at me, when's the next price action model going to be released? And none of you are answering me when I say, what are you doing with the other ones? It's like a vacuum. I'm speaking and no one's, hearing me. Nothing's happening. So it feels like those individuals are just waiting for that next silver bullet. That's going to be the one that makes it click. When you have everything really already between March content of this year, what I just did last month, and month 1 of the mentorship core content. If you blend that together and just add simple money management rules to it that we've learned in free tutorials, really, or what you've learned in the mentorship, obviously. But if you blend that together, like, you really have something that is phenomenal. Believe me, it's crazy how well you can find so many setups. There's no shortage of setups if you do what I just told you to do. Well, I don't understand. What am I supposed to do? You need to go back and study it and put the 2 points of content and reference together. I taught you how to go in with institutional order flow entry drills. Like, everyone wants to know, how do I get in? When do I buy? What's the bias? I just taught you all that stuff. I taught you that. And I'm still getting a plethora of emails from people that have been through the mentorship from 2016, 2017, and they're asking me, how do I get in and how do I figure out the bias? And it's frustrating for me as a mentor, because I have beat that to death. And I just told you how to get that information. Month 1 of the mentorship. Okay? And when you get in, how do you get in? What's your entry points? Use the institutional order flow entry drills that I taught you in last month's content. Simple money management rules, you know how to do all that. And where you can apply what I taught in the free tutorials, how to avoid drawdown, inevitable drawdown. I can't remember what the title was, something like that. The other one is, the question I'm getting is, how do I determine the bias? Well, I gave you a really easy way of determining that in the free tutorials for the scalping. So again, that's what mentorship is. It's pulling all those things. I'm telling you where to get the information from and how to put it together. And then I'm also doing it, for you in analysis. So that way I'm pointing in the direction that you should be looking at. So if you're struggling, just know that you're so close to getting it. You just got to keep doing what you're doing. You're going to get it. Trust me, you're going to get it. It doesn't feel like it, but it will happen. And when it does, it'll make more sense to you. That's the only thing I can tell you. But right now, I gave you everything in terms of where to find the information, put it together, and you'll see what I did today. With that said, let's go into a hourly chart. Okay, so here's the price action for today. It's consolidation day, big deal, nothing earth-shattering. And we drop into a 15-minute time frame. You can see how price worked within this run here, came back, filled in the buy side imbalance, sell side inefficiency, came all the way down into the order block, mean threshold, bang, hit it, came back off of that, and then hovered around in here, and we had this sell off in here. That was my first entry. All I was trading off of was a bearish order block right on this candle here. We hit it, and I was working within this range here. I wanted to see it run down below the rejection block. The rejection block is the lowermost close on this swing here. That's all I was looking for. I'm working inside of a range because I knew that the likelihood of a trending day wasn't likely to happen. How do I know that? Well, go back to the dollar real quick. We hit this level here, and we were trapped between two reference points. I didn't trust that this was going to give way, and I didn't trust that it was going to give way on the upside either. So we're in a condition where it's going to promote consolidation. And rewind that and listen to that again, it'll make sense. So if we go back into the cable chart, 15-minute time frame, we're going to drop down into a 1-minute chart because this is the time frame I was working within today. And I got to take this little scroller thing off over here. All right. So price was coming off of that bearish order block, which is seen here. It trades up into it here. And then all through here, all I was doing is selling into the rallies, closing in the voids. There's several voids in here. There's a void in here. And the rejection block was down here. You can see they run into it here. Price stabs into it here, consolidates, creates equal lows. It'll come back to that later on in the day. Price runs up, consolidates again. Right in here, I talked about the market maker sell model. It consolidates here, runs up to clear equal highs. Okay, so equal highs have been cleared with this run here. And right there, let me zoom in a little bit more. This candle here, bearish order block. So we're on the other side of the curve. Okay, so the highest candle is here. So we're on the sell side of the market maker sell model. So I want to see bearish order blocks traded into, and I want to short into that. I had a short put in right below the order block as price stabbed up into it. I'm short. You can see all this stuff on YouTube. I'm sorry, not YouTube, but on Twitter. Everything's been recorded and put on there. Price drops away, and I said in there, what would I be targeting for liquidity? Well, it's going to go right below here. That's where the nearest sell side liquidity pool is, right below that swing low. Price drops down, stabs into it, boom, hits it beautifully. Then we have these equal highs here. Okay, so these equal highs, price runs above that. I sold it as soon as it punched right above it, went short there. Again, all of this is on Twitter. And again, now once we're here, it's now going to attack the larger consolidation of the market maker sell model. So this consolidation, what's going to be resting below these equal lows? Sell side liquidity. So I sold here as it ran up inside of the fractal with the expectation that we would run below here. And I wanted to use 131.53, or I think it was 131.53, something like that. It may have been 131.52.5. I can't recall which one it was. I did a lot of trades today. But when it poked its head below these equal lows here, boom, you watch that limit order get filled as well. Price fell out of bed a little bit more. Come back up, create equal highs. Ran through that. And then sent it higher one more time above these equal highs. And we have another market maker sell model, but this is one that does not continue. Okay, so we have this run up, the sell off, drops down, I went long, and I put in 2 orders. One was to get out at 131.60 on a limit, which it hit almost like, well, very shortly after putting it in, and the other 2 orders were to get out at 131.80. And why did I do that? Okay, if we go over to the other chart that I have here, yesterday's price action. I need this to build the understanding of what I'm going to show you. I mentioned in chart form on, what was it, Monday night? Yeah, it was Monday night, that this area did not need to be filled. We had a sell side imbalance, buy side inefficiency. It filled here, and I gave you a chart saying it doesn't need to fill this yet. Okay, we're going to be looking for lower prices still, because that was what we were expecting initially going into the week. Price dropped down, cleared this low. You watch me do that trade as well. Then ran one more time, ran below the relative equal lows, hit this level here, 131.12-ish, whatever it was. Then price rallies. Okay, I wasn't involved in all this. My wife took me away from the computers, and I wasn't able to see any of this. Price started the day on the 3rd, which is the day of this recording here, and we had that run up into this area here. What's actually occurring right in here? Let's go out to a hourly chart, and we'll use this clean chart to do that. And we'll zoom in here like this. All right, so we have this inefficiency right in here. This is what it filled in, and I'll highlight that here. Right there. The low on this candle is 131.87. So rounded down. Why rounding down? Because we're coming up into it. Rounding down to 131.85. Okay, 131.85. And then we drop down into a 15-minute time frame. If that's the level I calibrate from a higher time frame, I want to go out earlier than that. So my target's going to be below that. How much lower? 5, 10, 15 pips, something like that. But since it's an institutional level, I know it's likely to get hit really easily. So 131.80. And that's what you see here. This is where I said get ready. And if we go back into this chart over here, I want to bring up this. This candle opened, rallied up, made the wick here, and then closed down. It would be better, like I said, in here. It doesn't need to, but it can, but it's not required to come back up to here and then go lower. If it trades back up into this area, once it does it here, has this range that's just a wick, once it runs back up, has that been filled efficiently? No. It needs to come back down again because there's no body in here. This is a volume imbalance, just like it was referred to on the daily chart of the dollar index. Remember over here? It's missing the bodies. Okay, so when we have that, we want to see price to efficiently fill that in. It needs to go through twice. So it goes up, yes, it offers buy side here with the candle body. Then it offers it on the downside, sell side. And it hits what level? Is it hitting this level here? Well, yeah, it is, but it's more specifically balancing back to this open. Because sell side is heavily offered here. Buy side's only offered briefly. This was a spike up in here, and it's going to be inefficient. Not every price level was sufficiently offered in this range from the high to the open. So when we rallied through, it gave a much better distribution of pricing for this range between the open and to the wick high. It does so here beautifully. Then this candle here opens up and then trades down, which gives us normal price delivery. So now this range on this candle here, it becomes a normal range. And then this becomes a BISI in a sense, like we see this become a SIBI, sell side imbalance, buy side inefficiency. This becomes a BISI, buy side imbalance, sell side inefficiency, until it comes down and trades right into it. So the low, look at the precision here, ready? The low is 130.83, and the open on this candle is 130.84, only off by 1 pip. And if you count the pipettes, it's only off by 7 pipettes, okay, which isn't even a full pip. So beautiful delivery there. And then we start to see the price run. We get up into that 131.85, and it's being pushed around because of changing the, here we are, time frames. So price trades and hits it here, sells off. It fills in that void relative to the hourly chart. And then in here, that's where I did that whole, here it comes, get ready, and it's going to rally. Zoom out here. Nice little spike happening right now. This is that area where I said, get ready, it's going to run. It's going to return back to 131.80. That's the institutional level. Why? If we look at this high right here, the high comes in at 131.70. You see that? So if price is down here and I'm expecting it to rally higher, why am I expecting it to rally higher? Because we've came back in all of this area here. We retraced all the way down, cleared some stops. We've already ran down and took liquidity on the downside. We had a market structure break on the intraday here, rebalanced. We had a buy side imbalance, sell side inefficiency, beautifully completed and filled in. This candle's high, 131.36. This candle's low, 131.36. Perfect. Price takes off, runs back above short-term highs. This short-term low here is a buy. Right in here, I'm accumulating more, and I get in with the 131.60 partial. Well, not partial, but it's its own position. And the other two were 131.80, which is 10 pips above this swing high. So what I was showing today was everything that I use for the analysis in terms of running liquidity, looking for buy-side liquidity, sell-side liquidity, looking for fair value gaps, institutional order flow entry drills. All of my entries were based on what I taught you for entry drills in March. All of them. Okay. If you look at what has been shown on the videos, look just to the left of where I was buying and selling, and you'll see all the time there's an inefficiency. Right in here. I'm gonna have to zoom in. Right here. This tiny little micro gap. The high comes in at 31.43. The low comes in at 31.44. There's 1 pip difference between this candle's high and this candle's high and this candle's low. So if we put a line right there, watch the voodoo in this, okay? Right in there. Bam. That's what I was buying off of. That tiny little space right there on a 1-minute chart. IPTA will remember that. You don't see that in retail. It's not explained anywhere else. That's not supply and demand. It needs to come back to something even as minute as that, especially when we're in a consolidation phase or consolidation profile. So price comes down, it hits it, small little imbalance, it comes back one more time. Bank traders know that this is actually a point at which they can now buy, and then IPTA will reprice running 10 pips above the swing high here, stopping short of that 131.85 1 hourly bearish order block where it filled in that inefficiency. On the downside now, buy side delivery has been offered and rebalanced, and I just want to take a look at what's going on right now at the time of the recording. Spiked up. It'll probably want to run through that 85 tonight. So even inside of all this mess, we can use what is normally done with a daily chart, 4-hour, 1 hour, 15-minute time frame that we've been doing on a week-by-week basis, and then you see me do it in Twitter examples. The application is the same, just now using an hourly chart. An hourly chart acts as a daily chart would in normal trading conditions. But because we're in a large consolidation, What's that consolidation? The daily chart on cable is a big block of price action. It's this back and forth daily chart price action. If we look at, well, not this chart, it has so many notes on it. You zoom in on a daily, we're inside this large consolidation. So to work within that, there's going to be price runs on liquidity. It's happening all the time. But it's not something that I can show you or tell you what's going to happen because it's changing on a minute-by-minute basis, as you saw today. So when we do these reviews, I can't say, well, this is going to be a buy and this is going to be a sell-up. This is going to be a price run here, because they're always forming dynamically intraday on a 1-minute chart. So that's the reason why, some of you that are new to this, you're thinking, why didn't you tell us about this? Well, I did, with examples today. Now, I'm not stating that you should do that, but you can practice that many times in a day using a minute chart. So it's not to teach you to go in here and try to over leverage and try to do 1,000 trades in a day. Okay, just because you watch me make $100,000 and some thousand in demo money just today alone and not have any losing trades and zero drawdown and everything was really tight on my entries and exits, that's not a enticement for you to try to do the same thing. There's a lot of things that you don't know about me and the things that you don't know about this information, and I'm the author of it. So I can do a whole lot of it, and a lot of things that you didn't see today, I can still do more of that. It's not my point or goal to try to do all that to prove myself beyond what I've done today. And you don't need to prove to me that you're a superstar student and trying to do that. So please don't take that as an invitation to go in here and start trying to run up an account with a 1-minute chart. You're just going to hurt yourself. But in trending environments, the 1-minute chart is only going to have, a far less number of setups because it's going to be during long extended price runs, directional. But because we're in a large consolidation, I can work within that range. And all of those trades were done inside that one single candle here today, which is incredible, isn't it? When you look at it like that and take a step back and think, wow, there's a lot of opportunity. I don't need to be in every single move, but you do have opportunities to trade and practice in your demo for price runs, because that 1-minute chart, there's a lot of them occurring in conditions like this, so you can practice. And again, it's not about how many pips, because if the price run only runs like 7 pips, but it still gives you the same type of outcome in terms of where you thought it was going to move from as an entry to an exit, you just expand that on a larger time frame when it's available. And it's all this. Price is fractal. Everything I did today was to demonstrate everything that I teach on a daily to 1 hour to 15-minute time frame is applicable to a 1 hour chart acting as a daily chart, a 15-minute time frame acting as an hourly chart is in normal conditions, and then the 5 or 1 minute chart acting as a 15-minute time frame for entry that you normally see me using. So all I did was scaled everything down to lower time frames, but keeping it in parent and subordination roles relative to the time frame hierarchy. So this, like I said, April is going to be a little bit more complicated, and I warned you ahead of time. So if this month feels like, wow, I'm not getting this, it's normal. Trust me, it's normal. We'll build on it, okay? Because you're here to learn, and I have a huge amount of information still left to teach. And I have to go slowly through it because it's very, very dense. And you have to take small portions of it, work with it a little while, and then as I go into deeper waters with you, you won't drown. So until I talk to you again on the weekly review on Friday, I wish you good luck, good trading. Please do not engage the rest of the week because it's going to be very, very tricky. Low probability scenarios are abound usually in this week going into non-farm payroll. Don't chase it. Okay? Be careful. I'll talk to you on Friday.